Give it up for Danielle DiMartino.
Danielle DiMartino.
Danielle DiMartino Booth.
So the market's been cautious about the Fed's path ahead on interest rates since Chair Jay Powell took a hawkish tone after their last meeting. That was earlier this month. My next guest knows a thing or two about the Fed, having been a Fed insider. Let's bring in QI Research CEO and Chief Strategist Danielle DiMartino Booth. It's great to see you, by the way. It's been a while. What can we expect from the Fed in interest rates in 2025? You know, you've now got some strategists that are coming out and saying that, and we just had one saying that inflation's going to go higher next year. And we may not be in a cutting environment. We possibly could be in a raising environment in 2025.
Well, Cheryl, I wouldn't get too far ahead of myself with those kinds of predictions. We know from real-time inflation metrics that we've seen some pops in grocery food items, for example, over the holidays, and we've got predictions of a very cold January coming across most of the United States for January. So utility prices, we also know, are going to be rising, but the much greater weight in inflation, and one that actually Chair Powell acknowledged is already coming down and headed towards that 2% target. The biggest weight of all is shelter. And we are indeed starting to see some dissipation in home price appreciation and outright declines in rents across the nation, as we've had 500,000 apartment units come online for 2 years running, with 800,000 more units coming out of the construction pipeline here in the next year or so. So that the biggest weight on inflation, Cheryl, is going to be shelter. And I think that what's going to surprise investors, I was calling for 3 rate cuts in 2024. I think I'd be calling for 5 or more rate cuts in 2025, which is more than what the market is pricing in and more than what Fed officials are expecting right now.
Yeah, that would be definitely a market positive, and you're right about the apartments coming online. So that's a great point that you're making. You do say it's clear there's dissent in the ranks of the FOMC. You talk about particular, Austin Goolsbee coming on board. What are you seeing?
So you've got Goolsbee and Collins coming on board. They're going to be 2 of the more dovish speakers from the Fed. But then you've got St. Louis and Kansas City voters rolling onto rotation as well. They're considered to be pretty hawkish. And as we know, Chair Powell suffered the first dissent, if you will, from the Board of Governors, Michelle Bowman, first time since 2005 when Mark Olson dissented. So I can count on my hand. There are 5 different dissenters, but for 5 different reasons. Some of them are more hawkish, some of them are more dovish. But my point is, it's going to be more difficult to hold the committee together for Powell going forward into what we know could be a potentially more tumultuous time for him politically.
Well, the labor market, big piece of this, the employment picture. Labor revisions have certainly lowered private payrolls this year. So what does that mean, in your opinion, for the economy? You've got the inflation story, then obviously the job story.
Right. And Cheryl, when the nation's statisticians are literally rewriting history and taking a machete and cutting in half, we thought there were 2.4 million jobs created in the private sector through the year ended June 30. Now we know it's 1.2 million, with further downside potential for further revisions that are coming out later this month. You start to say to yourself, well, what on earth, why are we paying attention to these data if it's no better than something that the USSR would have created or China today? And in fact, what we have to do when we get these massive revisions is back out income that was not earned because these phantom jobs that were first reported don't exist. I think the greater risk, Cheryl, is that we find out that during the Biden administration, the U.S. economy actually entered the recession that a lot of those in the media have been telling U.S. hardworking households is a figment of their imagination.
Right, and that messaging is certainly one of the themes that we saw play out in the November election. And, I think, too, we have to run, Danielle, but I think one of the most interesting things, you mentioned the jobs report, is seeing those massive revisions month after month after month. And then when you did see meaningful jobs added, it was government jobs. I would argue those aren't necessarily the types of jobs that you want to see added to a thriving economy. So
you don't, and it looks like some in the federal government are in the crosshairs this year.
Yeah.
So
yes,
according
they
to
are.
Doge.
Yes, they are. Here comes Doge. Danielle, thank you so much. Happy New Year.
Happy New Year.
Yeah, it's good to see you.